Um, and the topic for today is the Research and Development Tax Credit, which you guys may have heard of, may have not, but hopefully today will be informative. And we also hope that you'll be able to benefit from this and hopefully give a little peace of mind during this interesting time that we're navigating through with COVID. Activities that we found qualified not only with Berkshire, but likely with you guys would be brewing seasonal beers, experimenting with different brewing techniques, developing improved brewing processes, production line improvements, and taking a more innovative approach to some of your packaging and design.
So the 4-part test is the more technical way that the IRS determines what research and development is. The examples on the previous slide were just that example, so I wanted to walk through it in just a little bit more detail. So the first test is a new or improved product or process. Those are the two kind of big ones within the brewing space. The golden area of R&D for breweries is definitely on the new recipe side or improved recipe. So if it's a recipe, you've never brewed it before, you're using different ingredients, or it's a new beer style, the likelihood is that will start your R&D project. But the same thing, the same logic kind of applies when you're going through and changing an existing recipe. So if you have a beer that you always infuse oranges into, but you're going to put raspberries in it this time, that change in ingredient is going to affect the underlying brewing process, the chemical reactions happening. So improving a product can also be an R&D project as well. And then the other area that can absolutely qualify, but you see a little bit less often, is on the internal process improvement side. So if you're trying to integrate different pieces of machinery in together, that could be an example of something that could also qualify. Of course, if you just plug in a canning line and you say, great, it works, just because it's new doesn't mean that's going to have qualifying R&D in it. The second test is that it needs to be technological in nature. So you guys need to be working within a field of hard science. So chemistry, biochemistry, food science, process engineering all apply to when you're making either a new beer or trying to improve your processes. The third and the fourth tests are pretty closely related. The third is that you go through a process of experimentation where you evaluate different alternatives. So what that means, and to use making a new beer as an example, you might have an idea of the beer that you want to make, a certain ABV range it's in, a certain IBU, but you're not exactly sure how you're going to get there. So you're going to come up with a recipe that you think is going to get you there, and you're going to go through the brewing process. If it turns out to be great and exactly what you want, then that's awesome. If it doesn't, what you're going to do is you're going to take it back to the drawing board and maybe try using different ratios of ingredients, using different ingredients themselves. But you're going to go through this evaluation process where you come up with, okay, what is the recipe that's going to get us to this beer that we want to create? So as you move through that process of experimentation, you're going to satisfy the fourth test, which is the elimination of uncertainty. So basically,
the qualifying cost to calculate the credit will be the salaries of the W-2 employees directly involved in either supporting and supervising the work. So it's more than just someone who's actually doing the work. It is both the managerial and the support roles. So you end up being able to qualify a portion of a number of salaries. And then if you guys have any subcontracted costs or 1099 employees, we can also take those into consideration as well. And then, of course, the raw materials and supplies that are used within the production. So Taylor's probably better suited to elaborate on what those actually would be in your instance. I think there are times when it's actually we can include the cost of the barrels,
Yeah, so the way that I would look at it is obviously it's anything that's consumed during your R&D process. So what can you not use again? So if you make a beer for the first time and then you run it through your canning line and it ends up being canned, you can't use a can again. Like, it's kind of a one and done product. So it's consumed during the R&D process, and then that could be something that could be claimed. The biggest distinction to make is any like big heavy equipment that you guys are purchasing and then depreciating over time, that cannot be claimed as an R&D cost. That would be viewed as like double dipping.
Then computers, this is more so a cost that's applicable to a software company. And then, oh, sorry, normally there's patents as well. Legal fees.
Sure. So there are, as Maggie said, 2 versions of the R&D tax credit available on the federal level. The first version that we're going to talk about is specifically designed for startups. What this credit allows you to do is you basically recapture a percentage of the money you've been investing in R&D, and you can then reduce your payroll tax liability. So as long as you guys have W-2 employees and they're paid a salary, you'll have a payroll tax liability. So what the credit does is, this one it's only something that startups can claim. So there's kind of 2 factors that we look at to make sure that you're considered a startup in the eyes of the IRS. Typically what we see for breweries is the year that you open your doors, you're going to have gross receipts flowing into the business. So to be a startup, you have to be within a 5-year window since gross receipts were first incurred. So whatever year you opened your doors, that's likely when you had the gross receipts. So that'll be the first year. The second factor that you have to take a look at is, are your gross receipts above or below 5 million? So if your gross receipts are below 5 million and you've opened your doors within the last 5 years, then you're likely going to be considered a startup and you're going to be eligible to claim this. And if you don't know what gross receipts are, a really easy thing to look at is like, when did you have revenue flowing into the business? Because this credit is designed for startups, you can claim it for a maximum of 5 years. And that 5-year window starts when you first have gross receipts. So if you had gross receipts in 2018, the years that you could look at would be 2018, 2019, 2020, 2021, and 2022. The catch is that you cannot look retroactively with this one. So you can only claim it on your current tax year or a timely filed return. And then the second version of the credit exists also on the federal level, but many states have also mirrored it. So it's kind of like a double benefit in some ways. This version allows you to reduce income tax liability. So if your business is profitable and you're paying income taxes, then you'll get to reduce that through the R&D tax credit. And this is the version that allows you to claim for up to a 4-year window when it's the first time that you're claiming. And when you claim retroactively and you file an amended tax return with an R&D claim in it, you'll have essentially overpaid your historical taxes. So you'll actually get a refund back to reimburse you for that. And then this version is permanent. You can claim it every single year moving forward. And hopefully it's a good additional source of cash flow.
So we have a slide that just covers a little bit about Layton. For those who haven't heard of us before, we are a global consulting firm. We've been around for, I think it's like 23 years or so. And we have a number of offices in Europe. And we originally were founded in France. And then as the tax credit became permanent in several different countries, we deemed it a good business opportunity to open up an office. So we came here to the U.S. Shortly after the R&D tax credit became permanent here, and it has been a huge success. There are so many businesses here that are eligible for the credit and just need some help in doing it, and that's exactly what we're here for.
And for me, I came into the call not expecting anything to fit, and now I'm overwhelmed that I don't know where to draw the line as to what to exclude. So I guess that's a good problem to have, but
Yeah.
Nonetheless, very informative, and I don't know what I don't know yet, so I'll have more questions, I'm sure.
All right, excellent. Well, we'll arrange time with everybody to speak further on this, and we look forward to it.